As chairman of Allianz Technology, a sector that's very much in demand recently, could you explain the board's role in managing the discount and the premium?
It's a critical question. I think it's a critical question for all trusts, but more so for a specialist trust such as a technology one, where actually demand goes up and down in a much more volatile fashion than for a trust generally. I think the board's role is to look after the shareholders' interests, and it's quite complex in that respect because, for example, buying back shares is not something a manager will usually want to do, therefore, because obviously they would lose income if they do that, but it may be exactly the right thing to do for shareholders if the discount's appropriate and market conditions are appropriate, and we monitor that very closely. More importantly though, we've worked on making sure there is as much demand for our shares as possible, and that's involved investing in marketing and communications, recognising that unless the manager who's based in California comes over and pounds the streets of Britain, they won't attract the attention that they deserve because their performance has been absolutely fantastic. But if you're going to narrow your discount and put it to a premium, as we've now seen with Allianz Technology Trust, you need the combination of that great performance, great communications, and obviously a conducive environment for demand for technology shares. And we've worked very hard at that. We've most recently we've issued a lot of shares, and we've had to go back to shareholders to get extra authorities to do that. So we had a special shareholder meeting. We've published a circular to enable us to issue more shares, and we've been a regular issue of shares, such that in the last 2 or 3 years, the value of the trust has gone from below £200 million to over £500 million.
Great to see so much demand for the company. Really good. And how has the board approached setting fees at Allianz Technology, and how have shareholders benefited from that?
In my time on the board, we've had, I might describe as 2 goes at fees, because I think it's a continuing responsibility of the board to look at all costs, but the fees are the most visible one of those. And when I arrived on the board, the manager just had an incredibly good year. They're about to be paid a very large performance fee, but it was clear to the board that the basis of that performance fee wasn't actually as well framed as it should be. Most importantly, the manager didn't have to make up for underperformance before another fee could be payable. So we renegotiated that fee at a lower level and made sure that the manager, to the extent they did underperform, had to catch up all underperformance before a fee was payable. And it took 4 years before that got back into positive territory. We paid a small performance fee last year, and I think we'll pay a very large one this year based on fantastic performance. But the board has made sure that that fee absolutely works to the benefit of shareholders. We've also, in the past year, rebased the management fee with a tiered scale. So at the end of last year, when the trust was worth, I don't know, perhaps 340 million or something, we agreed with the manager that to the extent the trust's market value is over 400 million, the base management fee would drop from 80 to 60 basis points. And the great news this year is that we've now got this over 500 million market cap, and the shareholders are benefiting from that every time new shares are issued, and it's a continuing benefit. Very pleased with that.
I'm sure they're very pleased with shareholders, and we have seen boards being incredibly proactive in terms of setting fees and reducing fees on the behalf of shareholders, so very good to hear that example.